Welcome to the B.F. Anderson Technical Report for November the 8th. Just a thought about investing is that you as an individual investor have a tremendous advantage over the institutional investor. The institutional investor has something called liquidity risk, which most small investors, such as myself, we really don't have that risk, because if we tend to focus on companies that have trading volume, because we're going to talk a little bit about volume with the charts. But when you see trading volume in companies that, and the best way to look at it is to take the number of shares traded per day on average and multiply that times the price of the stock. You always want to try to stay with companies that trade at least about $50 million a day. So you want to reduce the number to a dollar amount, because it's just so much more understandable. So if you start to think about that, if you're running $1 billion mutual fund, you really don't have the same flexibility and agility that you as a small investor have. So this is what Peter Lynch's book is all about, called One Up on Wall Street. But it's just a really important concept to get straight in your head, because if you put your money in a commingled fund, which is, say, billions of dollars, you've basically given up the only real true edge that you have as a small investor. So it's just something to think about. This is the NASDAQ. Just want to bring you up. Things are starting to settle down a little bit. Looks like this correction could hopefully be wrapping up. The market doesn't like uncertainty. And it could have been the midterm elections that have caused this rally. It could be that maybe interest rates are going to stabilize. It could be that maybe the Chinese tariff situation is going to stabilize. Nobody knows. So the thing to do is just take it a day at a time and just kind of keep an eye on things. Now, this is the NASDAQ, and what I'm doing here is I'm looking at the volume. Now, as we've noted in past weeks, the big chunk of volume came right in here on the 23rd of September, which pretty much got this correction started. So in other words, that day, the NASDAQ traded 3.5 billion shares. So that's institutional selling. That. So you really kind of want to say, as an individual investor, something ain't right here. Let's get out of the way. So then, as you can see, we kind of messed around, had another big up volume day in early October. But what happened yesterday was important. Now, you can see here that the NASDAQ has now gotten back above the 25-day moving average. Now, if that moving average turns up, and as long as the price of the index stays above, let's say, 74.45, which is where this moving average is, this moving average will turn up. Now, if the price breaks down below the moving average again, it won't turn up. So the main thing I'm looking at is I want to see that lower moving average start to turn up. Then I'll be starting to get a little bit more aggressive. But it was encouraging yesterday. We had what we call a follow-through day, which is, the rule on that is the NASDAQ has to be up at least 1.25%. Well, yesterday it was up 2.64, so it meets that criteria. And the volume had to be higher that day than the prior day. So that's called a follow-through day. So that's very encouraging. Things are looking a little better. Now, I wanted to take a little bit more of a snapshot here. This is a weekly graph. This is the NASDAQ plotted on a weekly basis as of the close of every Friday of every trading week. Below here is the 35-week moving average. So we're getting a little bit more long-term here. Now, you can see here, and I went back 2 years. You can see here, you got this really little temporary break. Then the uptrend resumed, and if y'all remember, in 2017 was a really good year. The market was up. I want to say the S&P was up. I can't even remember. I want to say about 17%. So 17 was really a good year. And then we got the tax cuts, and everything got real hyperbolic. And then we went back down and had a correction here in the first quarter. Now you can see that correction came on pretty high volume, but it was real short-lived. I mean, you had like one real high volume day, and then things started to stabilize. So it was a fairly easy correction. So we stayed in the uptrend, and all of a sudden here, around September 23rd or the end of September, early October, we started to break down. Now, not only did we break down, but we broke down on multiple days of heavy institutional selling. So we'll see how this week works out, because here we are, it's Thursday. We've got today and Friday to see where we go. But it really would be nice to see the week end with this green bar up above this 50-day moving average. But you can see that the volume really has picked up to the downside. Now let's see if we can get these institutionals back in here buying again. So what I'm really saying, though, is that what caused this correction? Well, multiple things, but I believe, it's my opinion, that the market goes through these corrections because there's a changing of the guard. It's where, stocks out there like the FANG stocks, I'm talking Facebook, Amazon, Apple, Netflix, all these stocks really pretty much tanked on their earnings announcements. Now, what does that tell you? It tells you that maybe we are in a peak of earnings. Maybe it just doesn't get any better than this. And so these institutions are basically selling out of these positions and then repositioning their money into companies that have potential. So that's one thing to be aware of. Now, the New York Stock Exchange High-Low Index, which is a calculation where we take the new highs divided by the new highs plus new lows, and we get a figure. And then we plot the ratio on a 10-day moving average. And you can see here that you do get extreme readings in both directions. Well, we got, mid-October, probably one of the most extreme readings that I've seen in a while, which means that there just weren't any stocks hitting new highs. Everything was hitting new lows. So, nasty correction, a lot of volume. Just be aware of it. But you can see here, we've turned back up. If we get back above 30, which we're right now, we're at 23.4, wouldn't take much to get us back above 30, would pretty much argue that maybe, the sellers are done and we're going to go back to having an uptrend. I hope that's the case. Now, another thing to keep an eye on is the number of new lows, new 52-week lows on the New York Stock Exchange. Now, you can see here, starting in September, October, we started to get really crazy amounts of new lows, 520 new lows, 400 new lows, but that seems to be relaxing. Yesterday, we only had 35 new lows. The day before that, we had 65 new lows. So if you come down here, you can see I've got a line at 40. When you start to see the new lows stabilizing below 40, that's good. And we're starting to see that. Now, the other good news is the S&P, the long-term indicator that we use, is the 10-month moving average compared to the 20-month moving average. This comes from Luigi Yamada, who I respect greatly. Basically, we can see how strong this uptrend has been. You got a lot of white space in here. That's very positive. Now, you can see when you get these death crosses that, things, with bear market, had a little mini bear market here in 2015 going into the election and Brexit. But you can see here that this looks nothing. This looks nothing like this, looks nothing like this. So we're starting to see some healthiness here. And the good news is that the index, which is at 2813, which is the S&P 500, is now above the upper moving average, which will start to pull that moving average up, and hopefully we maintain this uptrend. But that's encouraging. Now, on the fear greed, we're starting to see a little bit less fear, which is good. Now, think about it. If you're going to position yourself in a smart way, you really don't want to start buying heavily when everybody else is. In other words, when you get way down here, that's what we call extreme greed. That's where everybody is super optimistic. Everything's, the sky's the limit, and then you'll get the reversal. So this is probably a good time to be thinking about nibbling. We are doing some nibbling, and I use the word nibbling because you don't want to, fools rush in, and on Wall Street, that's a disaster. You don't want to rush in here, but I am saying that this is probably a pretty good time to be picking up on some ideas. Now, when we get to the watch list, I want to mention this real quickly. The main thing we're looking for on the watch list is that what companies are transitioning into a leadership position. And mainly, the most important thing is what industries seem to be the most popular. Now, these stocks that I put up here every week are it's all mathematically derived. This is not my opinion. This is simply using a relative strength indicator to pick out of roughly 3,600 stocks out there, we're going to pick out stocks that are showing the highest relative strength. So here we have a pharmaceutical company, Endo Pharmaceuticals, kind of broke down a little bit yesterday. Looks okay. Here's another medical equipment company called Glaukos. It's holding steady, but you're still seeing a downtrend. It's not like you're breaking out, making new highs. Here is another stock that we got involved in. We think it's interesting because there's a new technology coming called 5G that this company is involved in, and there's another company we've identified that's involved in 5G, because you always got to be looking to the future. Look to the future, and usually it's technology, and 5G does look interesting. But you can see here, waterfall decline, stabilized around the 50-day moving average, starting to show some signs of recovery, looks okay. Now here's an interesting situation, and we're seeing, for some reason, we are starting to see a lot of retail stocks popping up on our work. Now this is Tractor Supply. This is a rare looking chart here because you got a stock hitting an all-time new high during earnings season. That's a very positive looking chart. And Tractor Supply is like the old Sears and Roebuck. Sears and Roebuck used to have the farm store, and then they would have the Sears store. Well, Tractor Supply pretty much took over that business from Sears. Now, here's another interesting situation. This is an airline, United Continental Holdings, United Airlines, breaking out, hitting an all-time new high when everything else is not. So, for some reason, we're starting to see airlines. So the point of the watch list is just to see, there's a lot of change going on here. This is not like, it's still Apple, it's still Amazon, it's still all the tech stocks that were so hot for a while. Now, I'm not saying those stocks aren't going to work. I'm just saying I'm seeing rotation, and I think the rotation in the market is somewhat causing this correction. So if you have any questions, give me a call. Thank you very much.